chips. I'm getting rich. Running up digits, counted up 6 stacks. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich. I'm rich. Look at my chips. Yeah. I'm getting rich. Running up digits, counted up 6. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich.
All right. Great morning, everybody. Happy Tuesday. Hope you guys are having a wonderful Tuesday morning. We're going to get right into it. As you guys know, we trade the E-mini NASDAQ every Tuesday live on YouTube at 8:45 Eastern Standard Time. So I'm going to kind of go into what we trade, and then we're going to talk about how we trade it and how to manage those trades. Okay, so the NASDAQ is basically an index that caters to investors interested in innovative growth and oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders, driving economic progress and technological advancements. So these are some of the companies that you all may be familiar with. Okay, so we have, of course, Apple, we have Adobe, we have Ross, Microsoft, Cintas, Intel, okay, Monster Beverage, Comcast. So a lot of companies that you all are familiar with, we're trading the index that are comprised of all of these companies and how it responds to, what's going on in our economy. Okay. So that's NASDAQ. So let's talk about how to actually trade this pair and why it's so important to look at certain things before just hopping into the market. Okay. So this is our futures trading guideline on what we look for before entering the market. The first thing we want to identify before we even look to see if we're looking for buys or sells or anything like that is we want to make sure that we identify market conditions. And great morning to everybody that has joined. Great morning, everybody. Okay. We want to look at market conditions. This is very important. So there are 3 main market conditions. You have consolidation, where the candles or price action kind of moves back and forth. It's choppy, right? And so whenever you have a market that's consolidated or choppy, you want to stay out of those type of market conditions. It doesn't matter what type of strategy you have. This is a setup for failure. Okay. So whenever the market is consolidated, you should not be trading. Okay. The second market condition is a range. So with a range, you'll see price action, the candles, the movement of the candles kind of move back and forth. So it'll be kind of like a roller coaster where it comes from the bottom, goes back up, and it just stays in this area for a specific period of time. Okay. And so whenever we're in ranges, we want to look at the top of the range and the bottom of the range for entries. And I'll talk about that in detail in a minute. So we have consolidation, we have ranges, and then we have trending markets. So trending markets are pretty obvious. Okay, you have your uptrend and your downtrend. Your uptrend kind of looks similar to this, where price is making pivots and is showing you the ultimate direction that price wants to move is up. Okay, the ultimate direction where price wants to move is up. Okay, and then you have the downtrend, where you can obviously see that the ultimate direction of price is for it to go down. Okay. And so with trading, as long as you have the right direction based on, at least with futures trading, whether the market is moving up or down, you are still profitable if you're trading in the right direction. Okay. You're still profitable if you're trading in the right direction. So let's talk about the 2 main market conditions, which is the ranging market, and then you have the trending market. Okay. With the ranging market, here are a set of rules that we use to actually go about our trades. Okay. So we use something called the STC indicator, also known as it's just more of a sophisticated stochastic oscillator. Okay. Indicators are just basically confluences to give you more insight and confirmation that you want to enter a trade. Okay. It's not, I don't like to make full decisions off of indicators, but it does leave good clues on what's happening in the market. Okay. And we use this via trading view. Okay. So we trade on trading view when we trade the futures market. All right. We use the 15-minute chart. Okay. To determine directional bias for the trade. All right. So the STC, what does that look like? Okay. I'm going to show you what that is. And then I'm going to come back to the rules so you guys can have an understanding or a visual of what that is. All right. So let's look at this. Let me go over to the chart really quick for you guys. I took my my key levels off for now, just to keep a clean chart. Okay. So here at the bottom, this is our STC. Okay. This current area right here, this is current price. So right now, current price is what we call overbought. Okay, overbought, meaning that the market has bought a significant amount to a certain point where at some point price has to possibly correct itself. What does correct itself means? It has to come down for sales as well to rebalance the market. Okay, so if price is overbought, okay, I use my roller coaster analogy. When you're at the top of the roller coaster, you're expecting for the next movement is for it to go down. Okay, it's for it to go down. So when we're overbought with sales, we want the market to go down so we can be profitable. With buys, we want the market to go up so we can be profitable. Okay, so when we're at the top of the STC, when price is overbought, we're looking for sales. Okay, we're looking for sales. So right now, because we're overbought and we're on a 15-minute chart, this is the time of the chart right up here. Okay, we're on the 15-minute chart. So that just means that every candle that you see, it takes 15 minutes for it to close. That's what the 15-minute chart. If I'm on a 1-minute chart, that means every candle it takes is 1 minute for it to close. Okay, now we're looking for sales at the top. Okay, when price is oversold, it's the opposite. Okay, when price is oversold, that means we're at the bottom, okay, of the STC, and then we're looking for price to go up. Okay, so you'll get this motion here: oversold, overbought, oversold, overbought, oversold, overbought. So when you're in a range, when price is in a range, okay, remember with buys, we want price to go up, right? So we look for buys at the bottom of the range because it's already proven that price wants to move up at a certain price level. We look for buys at the bottom, okay? Now, for sales, it's the opposite. For sales, we look for sales at the top because we want price to go down. We look for sales at the top because we want price to go down. Okay? So, when we're looking at our rules, let's go back to our rules. And great morning to everybody that's joined. Okay? When we're looking at our rules here, when price is oversold, we look for buys. We just talked about that, right? Price is oversold, meaning we're at the bottom here. Okay? We look for buys. Okay? When price is overbought, we look for sales. Okay? When price is overbought, we look for sales. So we've already determined today that we are currently overbought. Okay? So that means our directional bias, meaning that we're favoring, it's not the all be all, right? Because the market can do whatever it wants, whenever it wants. But our favor right now would have been a sale, okay, if we're in a ranging market. Okay, but we'll determine what type of condition we're in a minute. But if we're in a range of market and the price was overbought, then we're looking for a sell. And then once you've determined that, we look for what we call a BPC, and I'm gonna go into that in a minute. Okay, so we're gonna look for that BPC on the 1 minute chart. All right, so that's the range. Now let's talk about the trending market. Okay, with the trending market, it's very simple. If we're in a downtrend, we're looking for sales because we already know that's the direction we want for sales. If we're in an uptrend, we're looking for buys. Okay, we're looking for buys. All right, and so we identify our entry based on key levels that are in the market. What are key levels? Okay, let's go back to the chart and determine what key levels are. Okay. All right, so key levels are significant areas in the market. I'm going to change this to yellow so we can see it clear. Are significant areas in the market where we see significant buys or sells. Okay, so this level right here will be considered a key level, and this level right here will be considered a key level. Why? Because first of all, these are the green candles, those are our bullish candles. The red candles, those are our bearish candles, meaning the red candles are sellers, the green candles are buyers. Okay, that's what that means. All right, so if we're looking at this, right, when price came up to this area, it doesn't have to be directly, just within that area. Okay, what happened? The candle started to move down. Okay, so this is what we call resistance. Okay, this is what we call resistance, meaning price moved up here. It was nice moving in a nice upward movement, but it resisted. Okay, it resisted to move past this area, at least for now. Okay, so the sellers push price back down. Okay, now think of it like the ball analogy. When you throw the ball to the ceiling, what happens? The ball bounces down. So that's resistance. The resistance is the ceiling. Okay. Now, here we have the floor. Okay. The floor is known as support. When you throw the ball down to the floor, okay, the natural reaction is for it to bounce up. All right. So when price came down to this floor right here, what happened? It went back up. It came to the ceiling. What happened? It went back down. Okay, came back down to the floor and now went up. Okay, so somebody tell me in the chat right now, based on this illustration that I just drew, what type of market condition are we in based on this area right here? Are we consolidated? Are we in a range? Or are we in an uptrend or downtrend? Somebody tell me, what is price doing right now? Put it in the comment section. Are we in a range? Are we consolidated? Or are we in a uptrend or downtrend? What is our market condition for today? And based on that market condition, that will determine how we need to trade. What is our market condition for today? Put that in the comment section. Are we in a range, an uptrend, a downtrend, or are we consolidated? What do you guys think? Let me know. All right. And while they're doing that, let's go look at what the rules are telling us based on these conditions here. Okay. All right. So let's see here. Let's go back. We have, for the range, we've already determined that we look for oversold or overbought conditions. For the trending markets, we're looking for uptrend or downtrend. Okay, so all we need to figure out is, are we looking for a buy or a sell at this point based on the market conditions? All right, let's see if anybody answered that. Okay, Mike says range. Sylvester says range. Excellent. Excellent, guys. You guys are spot on with that. We are currently in a range. In a range. Excellent. So if we're in a range, that means we need to figure out, are we overbought or oversold? Based on where we are right now on the STC, okay, we are overbought. We are overbought. So that means price has already shown us 1, 2, 3 times. Well, we'll see how this level reacts. 2 times for sure that it wants to push down at this area here. So we have to determine, okay, are we going to reverse here and get into a sell, or are we going to break out to the upside? Okay, so how do we determine if we're going to break out or if we're going to reverse and price uses this level as resistance again? Okay, we use a concept called BPC. Okay, BPC. All right, so let's look at a couple of levels here. I think I might have, let me see. Let me get this out the way here. See what levels we have here. Yep, I got a couple of levels here. All right, so we need to determine if we're going to get a BPC at this level here, confirmation, or a BPC rejection. Are we going to get a BPC confirmation or are we going to get a BPC rejection? Okay, so let's look at this. Let's first break down what a BPC is, and then we'll talk about how to actually look at this. All right, we'll talk about how to look at this. So let's go to, let's see here. We're going to go to the 1 minute. The first thing, let's define what a BPC is. So the B stands for a breakout. Okay, a breakout. What is a breakout? Well, we already determined that price is just kind of stuck. We'll use these 2 levels here. Let me make my lines a little bit straighter for you guys. All right, so we can already see that price kind of just played around in this area here, right? Just kind of stay here, up in this area here, right? So there wasn't a full breakout, okay? With a breakout, price clearly breaks through this level, uses this as support, and continues to go to the upside, okay? Or price clearly breaks out of this level, uses this as resistance, and clearly goes to the downside, okay? That's the motion that we're looking for. So the breakout is when 1 or more candles break past this area. Okay. So for this case, we're looking for 1 or more bullish candles, okay, the green candles, to break out past this area, which is look like what we kind of got, but there's some tricky sellers sitting up there. Okay, that's why we got that wick right there. But we'll talk about that. All right, so now let's look at this. So here we have a breakout. Okay. Now, let's go to the 1 minute so we can see it a lot better. Let's go to the 1 minute. All right. So if we're looking at this, let's go. Let me bring my breakdown over here so you guys can see it. Okay, so there's our breakout. Okay, here's our breakout right here. And I'm going to ask you guys, are we looking at a BPC rejection or BPC confirmation in a minute, guys? So be prepared to answer that. Okay, so we have a breakout here on this candle. This green candle right here clearly broke through this level. Okay, so that's our breakout. Now, the pullback can be a little tricky. Okay, so we got the pullback. And with the pullback, the most ideal situation, and let me tighten this up just a little bit. There we go. The most ideal situation for a pullback is for price to break out of here and use this level as support. As support right here. Okay? Instead of coming all the way back through this key level. That's very important. When it comes back into this key level, now we're looking at potential BPC rejection, meaning that it did not check off all three confirmations. Okay? So let's go back here. So we got our pullback. And then the last one for C is continuation. Okay? Continuation. BPC. So here's our breakout. This candle right here. Price pulled back down here. Now, what does continuation look like? Continuation needs to break past my breakout candle. I'll say that again. Continuation needs to break past my breakout candle or movement, my breakout movement. So we got the B. We can confirm that because it broke past here. We got the P, right? Because price came down here and it never came back into our channel. So this is a valid pullback. Now the C, you guys let me know. The continuation candle must break past my breakout candle. So do we have a BPC confirmation or rejection? Put it in the comment section, guys. Do we have a BPC confirmation? So type confirmation or rejection. What do you guys think? A BPC confirmation or rejection? So write that in the chat for me. Is it a confirmation or is it a rejection? What do you guys think? Okay, confirmation or is it a rejection? Let me know in the chat. And then I'll break down, once you guys answer that, I'll break down what it is. Happy New Day, Mary. Happy New Day. Glad you could join us. Great morning to everybody else that's joined, okay? Are we looking at a confirmation or rejection, guys? Are we looking at a BPC confirmation or rejection right now based on price action? Remember, we're looking for that continuation move to break past our breakout movement. Okay? So what do you guys think? Are we looking at a BPC confirmation or rejection? Confirmation or rejection? Let me know. All right? And so while they're looking at that, okay, let's go into detail about the continuation piece, okay? So this is the price action. I'll use this as an example for a bullish. This is a bullish BPC, by the way, because we're headed to the upside. Bulls means buyers. Bears means sellers. Bulls means buyers. Bears means sellers, okay? So this is a bullish BPC, okay? So we're looking for this price action here. Breakout, pullback, continuation, okay? This is the price action that we're looking for. Breakout, pullback, continuation. Okay. Now, based on what the candle is doing, the candles are doing right now, if we look at this breakdown, let me just go here. Okay. If we look at this breakdown, we have our breakout, pullback. What are we looking at right now? Are we looking at a confirmation or rejection? Mike says rejection. Tony says rejection. Absolutely. You guys are spot on with that. Absolutely. Great job. Great job. And shout out to Tony, one of our newest students, already answering and doing some great things. Excellent work. And Mike, I mean, we already know Mike is he's a pro at this point. Right? So now, what we're looking at here is the BPC rejection, guys, because price has not moved past this area right here. It has not moved past this area right here. Okay? So when we're looking at that, here's our confluence that we look for that kind of like really solidifies that rejection, right? So we get here, price comes here, we pull back, price comes back to this area, retests this area. Retest just means that it comes back to this area and tests to see if it can move past this area again, okay? And then it gets rejected again. So what we're looking at is what we call a double top, also known as an M. Okay. So when we see rejection happen twice here, price told us it wants to sell here, and then it tells us that again. Okay, now we're looking for a sell. Now we're looking for a sell. Okay. And typically we look for that sell based on our alerts on the 5-minute. Okay. But right now, we'll see what price is doing. It's just kind of really slow right now. We're getting a lot of little consolidation in this area right now. No really movement. So once the market opens, I am expecting to see some type of movement from this. Okay. So while we're waiting, let's talk about how to get in and out of trades and how to set your stop loss and your take profit. Okay. So when you're looking to get into a trade, all right, we have to set our stop loss and then we set our take profit. So this take profit is secondary. The stop loss is primary. Very important to get your stop loss set while you're entering your trade. Why? Because what happens is sometimes price will move so fast that it'll go in the opposite direction against you, and you'll lose a lot of money in a very quick time, in a very short period. Okay? So you want to put your stop there as a protective mechanism so you do not lose your entire balance, or so you don't lose a significant amount that could really damage your account. Okay? So there's stop losses for sales, and then there's stop losses for buys. All right. This takes some time to kind of, understand as far as direction, but let's walk through it. So we'll use blue as our entry line. I'm using this as an example. Okay. So this is our entry line. Okay. So let's say we're entering a buy. Here's our entry line. Okay. And then we'll use red for our stop loss. So we'll use this here. Hold on, let's go back. Let's make this red. Okay. We'll use this as our stop loss example. So you'll see me, I might put like SL or something like that for stop loss. And then we'll use green for our take profit, meaning we believe price will reach a certain level so we can take profit out of the market. Okay. Take profit. Okay. Now, when you are looking for a buy, we already know we want price to move up. Okay. So if price moves past my entry line, I am moving into more profit. The further away I am from my entry line, the more profit I earn. So let's say here, I'm closer to my entry line. I might be in $10 worth of profit. Here, I might be at $50 worth of profit because now prices move further away from my entry line. Okay. Here, I'm at $75 worth of profit. And let's just say price gets all the way up here. I might be at $100 worth of profit. Okay. Now, the opposite is for when price goes against you. Okay. So here I might be in a negative. I might be at negative $10 because I'm still close to my entry line, but I'm beneath it now. Because remember, our ultimate direction was for price to go up. So if price is moving down, that means our drawdown is moving down as well. Drawdown just means that active negative balance. Okay. And then as it moved down, now we might be down negative $50. Okay. And so you might say, I don't want to lose more than $75 on this trade. Okay. So negative $75 right here where our stop loss is, right? So the stop loss says, okay, we're going to take you out of the trade at this level. But if you did not have a stop loss in place, and let's say price continued to go down, let's say it went all the way down here. Now, instead of only losing $75, now you might be losing, let's just say, $575. Now you're in the negative about $575. So this is your protective mechanism to prevent you from losing a significant amount. Okay? All right. This is called risk management. Risk management is just as important as learning how to trade, because I've seen it time and time again where people may trade very well, right? But because they didn't properly manage their risk, they lost their account. Okay. So they were going a winning streak, win. But because they weren't disciplined enough to manage their money, they would lose that money that they won. Okay. So that's an example for a buy as far as stop loss and take profit. Now let's look at an example for a sell. For a sell, we remember the ultimate direction is we want price to go down. Okay. We want price to go down. So for a sell, let's say, again, I'll use the blue as our entry line again. Okay. Here's our entry line. All right. An entry line just means that's where you clicked sell. That's at a certain price. That's where you clicked sell. Okay. So that's what the entry line means. And it got you into the trade at that specific price level. Okay. Now, with the sell, okay, the further away price moves down, the more money you make. If price goes in the opposite direction, the more money you lose. Okay, so let's put our stop. Let's say this is our stop loss here. Okay, so actually let's switch these colors. We'll do this because this is profit, and then we'll use this for a negative balance. Okay, so let's say this is our stop loss right here, and this is profit. And then soon we're going to look into the market, and we're going to see if we can get into some trades today, guys. All right. So we have our take profit. Okay. So the closer I am to the entry line, remember we want price to move down. So we're at $10 here. We're at $50 here. Okay. This is a positive. We're in profit now. And now we're at $75 profit here. Okay. Let's just say that at our TP. Now with the stop loss, it's opposite, right? Because now when price moves up, we're in the negative. Because remember, we want to be on the right side of the trade. If price is moving down, we want to look for sells. If price is moving up, we want to look for buys. Okay. So here we might be negative $10. Okay. Here we might be negative $50. And then here we might be negative $75. Okay. So we're saying, stop, take me out of the trade if price goes past this level. That's what you're saying. Okay. And so if it goes past that level, well, you already have your protective mechanism in place. So that's why your stop loss is so important, because imagine if price continued to move up and now you're in the negative $700, where you could have prevented that by just putting a stop order in place. All right. So trading your stop loss, trading without a stop loss is like driving without brakes. All right. So that's a very dangerous circumstance there. I mean, I know traders that might do it without it, but from my experience, I believe that you should have a stop loss, okay, for every trade that you take. All right. So now let's talk about how to implement a stop loss and take profit in a real trade. Okay, let's talk about that. So what we're looking at, if I was to get into a buy, and you'll hear me say this, I'm in a buy, right? That's what I'm telling you what I'm getting into. Okay. So I might say, all right, I'm in a buy. So I'll click buy. Okay. And you're going to see this little panel here. Okay. And so units is just your contract. So that's how much you want to put into the trade, how much you want to risk. Okay. Based on where we are, as far as stop loss and take profit, I manage that. So with the $50,000 account, because NAS has just been a little bit more unpredictable lately, I'd say it's been, it's been moving kind of weird lately. We're not risking as much. So let's just say stop loss. Okay. Let's say I don't want to risk more than $150 on my trade. Okay. So I would have, let's say my stop loss based on this setup here would be at This price level right here is 20,973.75. Okay. 20,973.75. Okay. So this means that if price comes past this price level and it comes down, this is just for a buy example, I want it to take me out of the trade to prevent from losing a significant amount. Okay. And now if I say take profit, with the take profit, you can kind of adjust that when you get in, right? So you can put a standard like 250 right here for ticks. Okay. But that stop loss is essential. So I'll say, okay, I'm getting into a buy. My stop loss is at 20,973. That's pretty much how I'll do it, right? And so what you want to do is type in 20,000. Well, I'm going to say what I do is type in 20,973, okay, 0.75 as my stop loss, right? Because this is the price level. Remember, this is the price level where I say I did not want price to pass, right? If we were to get into a buy. So based on where my stop loss is, this blue line right here, this is where I would want my stop loss. Okay, and you look to the right, that tells you the price right here. Okay, I will be risking where price is right now, $87. $87. So I could put 2 contracts in here and that'll put me around that 150 mark. Okay. So I will have to go out and come back, but that will put me around that 150 mark. And so once I have that set, I check the stop loss and the take profit, I click buy, and then I'm in the trade. Okay. I click buy. Same thing for a sell. If I was in the sell, I would click, if I'm looking for a sell, I'm going to click sell. All right. Stop loss, take profit. And then I will mark where I will want my stop loss for the sell. Let's say I will want it at 21,026. I type in the price here, 21,026.75. Okay. And then I can leave my ticks at 250 so I can adjust that whenever. Okay. So based on where that was, I'll be risking $34. So that means I can probably risk about 3 to 4 contracts based on that move. As long as I'm only risking around $150, that's fine with me. That's fine with me. Okay. All right, guys. So we are now, it is 9:23. The next session, I'll talk more about the funding piece, but I wanted to kind of go back through the fundamentals because it's always important to have that in front of you, when you're looking at the market, just to make sure that you understand those basics to be able to effectively trade. Okay. So it's 9:23. And right now, let's go back to the 15-minute chart. And let's see what we got cooking today. Okay, guys, we got a little break here on a 15-minute. We're literally looking at a BPC on a 15-minute. But we don't get into any trades until after 9:30 because price can start to move up, but the volume of market open could easily reverse price and price could go in the opposite direction. Okay? Price could go in the opposite direction. So let's see what we have for today. We have 5 minutes and 40 seconds until the market open. Let's go to the 5-minute and see what we got going here. We got a couple of levels we have to acknowledge for sure. All right. So this wick right here, we have to acknowledge that. Okay. Because price came out and it came out strong. And then we had a wick. So with this wick, that just means that price came up to this point, but it wasn't strong enough to stay there. The body is where the candle closed. Okay. Not the wick. That means price was at this level, but it did not close at that level. Okay. That's extremely important to know. Okay. So we're going to put a key level right here because clearly there are some sellers at this level right here. Okay. Now, based on where price is, we want to figure out, all right, are we going to get a BPC at this 20,977 level? Okay. If you look to the right, that's the price right there. That's what I'm referencing to. 20,977 level. Or are we going to look for a BPC rejection or confirmation at this 21,064 level? Okay. These are the two levels that I'm looking at for potential entry. All right. And we're going to wait and we're going to see what price presents us. Now, we are clearly above the 50, guys. We are clearly above the 50 EMA. And the 50 EMA just is exponential moving average. Just means the average price movement for the past 50 candles. Okay. So that's telling us that price is moving in a nice little upward movement. Okay. So we're no longer in our range, right? Because this was our range here earlier. We're no longer in our range. We got our breakout, and here's our pullback. And let's see if we get some continuation. Okay. Our continuation entry would be here. Price needs to break past this area here. Okay. Because we already got the breakout. Here's our pullback. Price is staying here at this level. Now we got to see if price can break past here. If it breaks past here, we can enter and take it to the next key level. Okay. If it does not, if we come back into the channel and we see a strong rejection, because it already rejected here, right in this area here, and right now just kind of toying around. If it comes back into the channel, we have to start considering sales. Okay, so let's see what we get for today. We have 2 minutes and 50 seconds. If you have questions, please feel free to ask. Please feel free to ask your questions, because I know this could be sometimes a lot of information, but it's important for us to all be on the same page. Okay, that's how we grow and that's how we learn, is by asking the right questions. Okay, there's no wrong question, there's no stupid question. Okay, just want to put that out there so you guys can know I'll do my best to answer as best as possible. All right, so now if we break past here, guys, the price gap, meaning the potential price movement that we have between here and here, is pretty decent. Okay, let's go look at let me go to the higher time frame and see what we got here. If we look to the left, oh, we hold on, we might gotta go to the higher time. Okay, here we go. All right, so on the 1 hour, we can see at this level right here, there was extreme sell-off right here. There was extreme sell-off right here. And we break past this level, then we got some nice little upward movement. So our take profit might not be that, we'll see. We'll see if price can break through those levels. Okay. So let me go back to the 15 minute. And I'm sorry, the 5 minute. And let's see what we have for today. So if we break out of this, guys, our price gap is not that strong. Now, if we get past this 21,120 level, that's different, because now we got a nice little price gap between here and there. Okay, but between here and there, it's kind of tight. I'm not gonna lie to you guys, it's pretty tight. Okay, so we have to be cautious of that, because it was a huge sell-off on the 1 hour at this level. So there are some sellers. Let's look at our volume order flow to see how much money is moving in the market right now. Let's see what we got. We got 50 seconds, guys, until market opens. Okay, looks like we got a lot of buyers in this area, more than sellers. Let's go to the 15. More sellers here based on the 30 minute. I'm sorry, the 15 minute. Let's go to the 30 minute. Not a lot of orders here. Not a lot of money here. Okay, let's go to the 1 hour. Let's see what the 1 hour says. Yeah, not a lot of money. So this could go either way, guys. We could get a lot of sellers here, or we can get some buyers that come in here. Okay, the buyers have a higher chance to push through, though, because there's not a lot of sellers sitting in this area. All right, the market is now officially open, guys, and let's go see what happens. Let's see what happens. All right, so here we go. We got price moving. Once price gets close to this level here, I'm going to navigate to the 1 minute chart to look for potential entry. Okay, let me get my stop loss in play here. That's my little measurement for stop loss. That's not my actual stop loss, guys. Okay. All right, so here we go. So price is currently at 20,996 in that area here. Let's see if we can get here. What I'm looking for is price going to use this level as support here to continue to push up, or is it going to use this level as, is it going to break through this level? And then are we going to continue to come down? Because we do have a nice little M structure right here. All right, so let's see what we have. This is a pretty strong bearish candle. Okay, pretty strong bearish candle. Let's go to the 1 minute. It's getting closer to our key level here. Let's go to the 1 minute. Now, if we do get a sell opportunity, because price just broke past the 52, we see if we do get a sell level, I will want my stop loss to be about right here at this level right here. Okay, that's where I will want my stop loss if we do get a selling opportunity. That's 20,984.75 right now. Okay, but based on the way price is responding to this level right here, it might be finding support. All right, how do we know that? Because we see this bullish candle pushing up, right? If it was strong sellers, they would have pushed price through. But we have a wick right here that shows us there's some support right there. That's our floor, right? When price comes down to the floor, we see prices pushing up, bouncing up, like the ball analogy I talked about. Okay, so let's see if we get a buy signal here on the 5 minute, because this is some significant buying pressure right here that we're looking at, guys. That's a huge wick right there on the 5 minute. Okay, that's a huge wick right there. Let's see, we got 2 minutes and 30 seconds, guys, left on this candle right here on the 5 minute. Okay, we got to see how it closes. We never want to enter a trade when the candle is still moving and trying to decide which way it wants to move. That's extremely important. If the candle is not closed, then you should not be entering a trade. Okay, because sometimes what will happen is it'll start off strong one way and then it'll reverse and go the opposite way. Okay, so you want it to close. This is a time of how much time is left on the candle, at least on this chart right here, on the 5 minute chart. So it's 2 minutes left on this candle right here. All right, so we're waiting. We're trying to see what is going to happen here. Okay, are we going to break past here, or are we going to get rejected? What y'all think we getting into today? A buy or a sell, guys? What y'all think we getting into today? A buy or a sell? Let's see. A buy or a sell? Who's right today? Minute and 30. We're going to be patient. We're going to wait for our setup here. Okay, we're going to wait for our setup. All right. And I'm going to take the volume order flow off for right now. All right. And we're going to look at strictly price action right now. Okay. And I think I have those on. All right. So here we go. Let's see. It's a nice little push right here, guys. Nice push. 50 seconds. 50 seconds. I want price to clear here, though. I can't consciously get into a buy knowing that there were sellers sitting here waiting to push price down. Okay, this candle does look good, but I need price to pass here for me to enter. Okay, that's just how I feel. We have to acknowledge what price has already told us in the past, the most recent past. Okay. So we got 25 seconds left. Let's see if we can retest here and break through. That's what I would like to see. It's probably not going to be on this candle. It's probably going to be on the next candle. So let's see what happens. Okay. 10 seconds left on this one right here. Let's see what's happening on the 1 minute. Okay. It's finding support off of the 50, which is what we saw on the 5 minute. Now let's see what we get right here. Okay, let's see what we get. Are we going to break past this little area right here, or are we going to get rejected again? If we look at the structure on the 15 minute, we're on a nice uptrend, right? So that was the breakout. That was the pullback, and this is continuation. But remember, we want continuation to break past our breakout candle. Okay? So really, that was a breakout candle right there. So let's just see how it responds here though, because we can't just hop in and knowing that there were some sellers sitting right there. Okay. So let's go back to the 1 minute. And let's see what we got cooking here. Now, if we do get into a buy, I will want my stop loss to be, let's see, here's a break here. Okay, we're getting close. Let's see what this next candle, I'm getting ready for a buy, guys, just in case if we break through. Okay, my potential stop loss, let's see, it's going to be 21,003 for my potential stop loss. 21,003.50. Okay. And based on where we are, I do not want to risk all of that. Let's see. One contract is good for me right now. All right. 21,003. 21,003. I need a solid break. We got 15 seconds left on this candle right here. I'm not in anything just yet. I'm just getting prepared in case if price breaks past this level right here. Okay. 21,003. Okay. So let's see what price does for us. Now, if we start seeing some strong bearish movement come to the downside, we know that we're experiencing some rejection, okay? And we have to consider sales. But if we break through, then we'll look for that buy. Okay? We'll look for that buy. So let's see what the market gives us today, guys. Let's see what the market gives us. So I'll type that right here on the screen for you guys while I'm waiting for this candle to close. Okay. Potential stop loss 21,003.50. That's the number right there for the potential stop loss. Okay. Let's see. 2 seconds left. All right, let's see if this is our engulfing candle here to the upside, a bullish candle. Let's see if we get a push for this one. Okay, let's zoom in a little bit so we can really get in and see what's happening here. Can we break through, guys? Can we break through? Okay. Let's see here. 32 seconds. We got to get a clean break. Clean break. That's what we're looking for. A clean break, guys. 20 seconds. It's trying. It's trying to break through. Let's see. 10 seconds. 10 seconds, y'all. 10 seconds. All right. Still didn't break through. So we're being patient. Let's see if this next candle breaks through, y'all. Let's see. Let's see if this next candle breaks through. All right. Not bad. Not bad. We wanted to close, though. We wanted to close. We wanted to close. Okay. 35 seconds. Give us a nice amount of body above this line. That's what we want to see. Let me get in close so we can see exactly what we're looking at here. Here we go. Let's see. Can the buyers push through? 15 seconds. Struggling a little bit. That's not too good. That don't look too good. All right. We got to see what the next candle does. Is this the one? Let's see. We're going to be patient. Try not to get faked out. Okay, we got 40 seconds left on this candle right here. Try not to get faked out. Don't be anxious. Be patient and wait and see what the candle gives you. Okay? This is a little volatile candle a little bit. 25 seconds, guys. 25 seconds. Okay. Can we close above? Can we close above? Being patient. All right, guys. I'm in a buy. I'm in a buy. I'm in a buy. Okay. So my take profit is going to be right before this level right here. Let me see. My volume order flow. Hold on. Let me go to the 5-minute real quick. So the stop loss is 21,003.50. Okay. So when you click buy, again, you put one contract or however many contracts you want to put here. Stop loss, you type, if you want to use the whatever, you type in 21,003.50 if you want to use that. Take profit, and then you put your take profit. You can just put 250 ticks right here. Okay. So take profit is going to be for me right here. 21,113.75. Okay. So let's put that there. TP1 is at 21,113.75. 0.75. Okay? 0.75. So that's what we're looking at right now. All right. And then the stop is right at should be right beneath the body of this candle right here. All right. So those are the levels that we're looking at. Those are the levels that we're looking at. So we'll see if we can close within the next 15 minutes or so. I'm currently on the 5-minute. I'm currently on a 5-minute chart. All right, and these are my numbers right here. These are my numbers. Okay. Potential stop loss 21,003.50, and my TP is 21,113.75. So if you want to enter your take profit, you can put the price in, or you can drag the line down to the price. So if you look to the right here, you'll see, okay, that's 21,113.75. So you can just click and drag down if you want to. Okay, click and drag down. So this is the TP. You just click and drag. Okay, click and drag. Or you can double click it to modify the order and type in 21,113.75 and then just click modify order. You can do it either way. Okay, so that's what we're looking at. Now TP2, if we break, will probably be right. So I'm going to put this here so I can have a guide for that. And then TP2 would be about 21,233.25. So that's TP2. Okay. 21,233.25 for TP2. TP just stands for take profit. Okay. TP2, 21,233.25. And I'm going to drop that in our chat here. I'm going to go ahead and take this off the screen for the numbers. So if you're in the chat, you will have this. Okay. So here we go. And I'm going to drop that in right there. Okay. So those are the numbers. All right. So let me go ahead and delete this. And let's just see what happens with price, guys. Let's see if we can break through and keep pushing to the upside. Now, if we get a little bit of resistance here and we hold about right here, that's a good sign. Okay, because we know with uptrends, it don't just move straight up. And with downtrends, it doesn't move just straight down. You do have some pivots, okay, that happen. So if it comes here, let's see here. If it comes here and it pivots down to here, uses as support to push to the upside, then that's pretty valid, right? But we'll see if we can, are we going to continue to push up? Is it going to try to reject and come slamming down? Or is it going to use this as support to push to the upside? Okay, to push to the upside. So let's see what happens. We have 4 minutes left on this candle right here. This that candle that just closed was a doji, which means that price is indecisive. It doesn't know if it wants to move up or down. When you see candles that look like this, that look kind of like a cross, that's a doji, meaning that the buyers and sellers are unsure if they want price to move up or down. Okay, so that's what that means there. All right, so let's see what we can get out of this market today. But we have our level set for TP1 and TP2. And let me go ahead and move my TP1 back here. 21,000.75. I'm just going to type it in. Let me do that. 21,000.75. 1,113.75. Okay. All right, guys. So now we're just being patient and we're going to manage this trade. I really kind of want to move this stop down a little bit, guys, to be honest with you. But I think we'll be okay, right? Because I see that we have support here, right? And then we got a nice movement to the upside. Right here is a little bit more riskier for the stop. Okay. So I'm thinking about possibly moving this down a little bit, to be honest. Based on a 5 minute. Yeah. Let's see how these next candles react. Okay, let's see how these next candles react. But that's what I'm looking at for potential stop loss. Now that I'm looking more at the structure, I'm looking to kind of adjust that. Okay. But it looks like it might be using this little level right here as support. We'll see. We'll see. Okay. This is one little level, and then this is the next level. So we should be good where we are. We should be good where we are. Okay. Those are the two levels that we're looking at. So we have 1:40 left on this candle right here. And I'll just draw some little lines right here so we can have some visuals. Okay. And then we'll see if we can close within the next 10-15 minutes, guys. Well, more so 10 minutes now because 5 minutes just passed. All right. So let's see what we get. Let's see what we get. So we have 1:12. If you have questions, please feel free to ask, guys. Okay. Okay. Sylvester said he think we're going to get into a sale. Interesting, Sylvester. Very interesting. Let's see. Let's see. Let's see what price does. Let's see. Okay. Here we go. 50 seconds. 50 seconds. 50 seconds, guys. And tomorrow, we'll be live on here at 8 o'clock. And that'll be more so for the binary side. Okay, at 8 a.m. At 8 a.m. And then Thursday, we have the private sessions. Okay. So this is what we're looking for right now. We got 15 seconds left on this candle. And I don't know. Let's see. I mean, the sellers are coming in, but I'm not too sure of how strong they are at this level here. Now, if we get further up here, now we know there's some sellers sitting up here. But in this area, we might be able to, at least to this key level right here. Let's see. If this candle engulfs this candle, that's a great sign. So let's talk about engulfing candles while we're waiting. You have a bullish engulfing candle, then you have a bearish engulfing candle. Let's talk about the bullish engulfing candle since that's our circumstance right now. With the bullish engulfing candle, what you'll see is the candle. You'll have a bearish candle that kind of looks like this. The body of the bearish candle looks like this. Okay. And then you'll have the body of the bullish candle that looks like this. Okay. Looks like this. And so what you'll see is this is a clear indication that there are more buyers than sellers in the market right now. So this bullish candle engulfs this red candle. The body of the candle is bigger than this red candle, the bearish candle. So there's a high chance that price will continue to the upside. I say about a 70% chance. Okay, that price will continue to the upside. With a bearish engulfing candle, it's the opposite. Okay, for bearish engulfing candle, it's the opposite. So you'll have a bullish candle that's like this. And then you'll have a bearish candle that's like this. So the body of the bearish candle is bigger than the body of the bullish candle. So typically when you see this, there's a 70% chance that price will continue to follow. Okay? Price will continue to follow. So right now, we are experiencing, we're witnessing a potential bullish engulfing candle. The body of this candle looks like it's bigger. It's going to close out bigger than the body of this red candle. So that tells us if this happens, there's a high chance that we could continue to the upside and we could potentially hit our take profit if the candle closes strong. Okay, if the candle closes strong. Okay, so that's what we're looking at. That's what we're looking at. Okay, so we got 2 minutes left on this candle, guys. 2 minutes left. All right, and let's see if we can hit our take profit area right here, either in this candle or the next candle. Let's see if we can hit it. Okay, let's see if we can hit it. We're getting close to it. We're not there yet, though. Okay. If we get extremely close, like up here, guys, you can go ahead and break even. Because at that point, I mean, we're just inches away from our profit target. Okay. Let's see how it closes. We got 1 minute and 20. Minute and 20. I don't like the way this wick is looking. The sellers are creeping in. They trying to creep in, y'all. They trying to creep in. Okay, guys. So I'm going to break even now. I'm going to break even now. That means I'm moving my stop loss above my entry line. Okay, I'm moving my stop loss above my entry line. When you break even, you put yourself in position where you're at a no loss trade, right? So even if price comes against you, you don't lose anything. So I am at a break even trade, guys. Break even. Okay, I'm at break even. 25 seconds left on this candle. Let's see if we can cross the finish line here on this candle here. If not on this one, let's see if we can catch the next one. Okay, it is closing pretty strong though, which tells me that the bulls have some momentum. This might be it. This might ride for the rest of the day, y'all. That's a strong candle right there. That is a huge candle. Huge candle. All right, guys. I'm going to go ahead and take my profit. We're that close to take profit. I'm going to go ahead and take my profit. Okay. So I'm closing out. Let me close out here. I'm just clicking this X here to close my position. Okay. Oh, TP already hit. Never mind. TP hit, guys. TP1 hit. Okay. So great job. if you were able to participate in this trade and you made some profits from this trade, go ahead and put a fire in the comment section for me, please. If you were able to participate in this trade and you made some profit from this trade, put a fire in the comment section for me, please. Just kind of give me a heads up of what y'all got going on. Put a fire in the comment section for me, please. All right. That was a great trade, guys. That's the breakout. That's the BPC confirmation that we want to see. That's what we want to see, guys. Okay. We want to see that clear indication of a BPC. That's the type of movement that we want from NASDAQ. Not the back and forth fluctuation, trying to figure out what it wants to do. You know, it's just not conducive to that. There is a chance that price could continue to move for the day too, guys. Okay, but I'm out for the day. I'm good. Okay. But if you can, guys, put it in the comment section. Put a fire in the chat and let me know how you guys did. Let me know how you guys did. All right. So we're gonna wrap it up for today. I'm gonna leave this one up because this was a good session breaking down just a lot of the fundamentals, so you guys can come back to this one. All right. And we're going to. I think I see your comment, Mike. Okay, good stuff. Good stuff. Looks like we breaking past this level too. All right. So make sure you guys like, subscribe, hit that bell notification button, and we'll be back on next week, 8:45. Feel free to share this out. Anybody can join to get the knowledge, get the information that's out there, okay? Information changes situations. So great job today, guys. Great work. Let's keep building, and I'll catch you guys on the next one. Peace.